The numbers blinked red. They were supposed to. A little dip, a minor correction, the rhythm of the market. But this was not breathing. This was a gasp, a violent, sudden intake of air before the plunge. On May 6, 2010, the world held that breath. The Dow Jones began to fall. It did not slide. It did not drift. It plummeted, a hole torn in the fabric of the digital world. Everything solid being sucked into the void. A freefall that defied logic. A cascade of selling feeding on itself, growing more terrifying with every microsecond. Traders on the NYSE floor could only stare. At the Mercantile Exchange in Chicago, chaos. Screens flickered with impossible prices. Procter & Gamble trading for pennies. Others quoted at $100,000 a share. Machines and algorithms became agents of chaos. They were selling, caught in a feedback loop of fear, threatening to unravel the global financial system. In minutes, the impossible was happening. Within 20 minutes, nearly $1 trillion evaporated. $1 trillion. While $1 trillion played a game of hide-and-seek with the global economy and the titans of Wall Street felt the ground give way beneath their feet, Navinder Sarao was sitting in his childhood bedroom. The house was in Hounslow, a modest suburb west of London, a world away from the gleaming towers of Manhattan or the City of London. No $1,000 suits, no frantic shouts into a bank of telephones, no assistants rushing in with market data. There was just Nav, a man in his pajamas, hunched over a laptop. The chaos echoing from the stock exchanges was a distant storm, a tempest he watched not from a yacht, but from the quiet harbor of his small room. The room itself was a testament to a life lived simply, almost ascetically, in stark contrast to the vast sums of money he manipulated each day. It was the same room he'd grown up in. Posters, textbooks, not market charts. A standard computer, a commercially available internet connection, and a piece of software he had modified himself. From this humble outpost, Sarao could reach into the heart of the world's most advanced financial market and make it dance to his tune, all before he'd had his morning coffee. His neighbors knew him as a quiet, unassuming man. He drove a beat-up old car, and his daily routine was unremarkable. To understand what happened on that day, you don't need a doctorate. You just need to understand a simple principle: supply and demand. If many people want to buy something, its price goes up. If many people want to sell it, the price goes down. The stock market is a lightning-fast digital auction built on this principle. Navinder Sarao didn't break this rule. He bent it. He used a technique called spoofing. Brutally simple and ingeniously effective. He created ghosts in the machine, phantom orders that tricked others into acting against their own interests. Imagine a fruit market. A massive pile of apples appears. Crowds gather to sell. You panic, lower your price, and the pile vanishes. It was never there. This is precisely what Sarao did, but with digital orders instead of apples. Sarao's genius was automating the bluff, an algorithm, programmed instructions, acting at superhuman speed. His program would place massive sell orders, worth tens or hundreds of millions, on the E-mini S&P 500 futures market. These orders were never intended to be filled. They were a bluff. Visible to all, they pushed the market's perceived center of gravity down. The final step was crucial. Just as price approached his phantom orders, his algorithm canceled them in the blink of an eye. The bluff had worked. Price was artificially pushed down by fear he created. He'd buy low, then place huge fake buy orders to drive price up and sell for profit. Tiny waves of fear and greed all day long, small profits that, over thousands of trades, added up to a fortune. The technique was called layering, a sophisticated form of spoofing where his algorithm placed large orders at different price points, creating visible layers of supply or demand. Not a single ghost, but an army, arranged in formation. These layers built a wall of selling pressure, persuasive to the bots scanning market depth. Other algorithms tried to get ahead of it, triggering real sells toward Sarao's trap. This wasn't a one-off. It was a daily grind, perfected over years. The algorithm was his puppet, the S&P 500 futures market, his stage. With a few keystrokes, he could move the world's most liquid instrument, making tens or hundreds of thousands on a good day. By the flash crash, he'd quietly accumulated over $40 million. Investigators found his orders were a significant share of sell-side activity at points that day. He wasn't the sole cause, but his relentless spoofing amplified a fragile market. When panic hit, his actions were gasoline on the fire, yet his life remained the same. Offshore accounts, untouched, living with his parents, public transport, the same simple bedroom. For him, the thrill was the game, a cheat code for the world's biggest video game, played as long as he could. The hunt for the cause began the moment the market stabilized. The world's most powerful financial agencies, the CFTC, the FBI, threw resources at the problem. For years, they chased shadows. They analyzed terabytes of data, interviewed high-frequency trading firms, explored every theory. The fingerprints were faint, buried under legitimate trades. The breakthrough came from painstaking work, a whistleblower analyst combing the day's data. Like a single grain of sand on an endless beach, a pattern emerged. A single trader placed massive orders that vanished just before execution. Most pronounced right before big swings, up and down. The ghost now had a digital signature, a thread to unravel a secret life. From the CME through brokers and servers across the Atlantic to a small firm, a single account, a name, Navinder Sarao. Not a gleaming office tower, a two-story house in Hounslow. Preposterous. Could one man in a bedroom cause such chaos? A 5-year marathon of digital forensics, spanning continents, closing in on a man who bought groceries at the local supermarket. Section 7. The net closes in. The end came on a Tuesday morning in April 2015. No car chase, no standoff. Agents from Scotland Yard, acting on a U.S. extradition request. They knocked at his parents' house in Hounslow. Navinder answered, by some accounts, still in his pajamas. The virtual world he dominated collided with the real one. The game was over. The man who moved markets from his bedroom now faced handcuffs and a police car. Shockwaves hit the financial community. 22 criminal counts. Wire fraud, commodities fraud, market manipulation. Potential sentence, 380 years in prison. The U.S. alleged one man with modified software was a key culprit in a trillion-dollar market crash. He fought extradition, arguing placing and canceling orders was common practice. Sharp-edged capitalism, not crime. He claimed scapegoating for systemic failures. Ultimately, he was extradited. He pleaded guilty and became a cooperating witness, using encyclopedic knowledge to prosecute others. His potential centuries reduced to time served and a year of home confinement. He returned to Hounslow, his fortune gone. His name forever linked to one of the most chaotic days in market history. Section 8. The game, then and now. In 2010, Sarao's toolkit was a custom-modified piece of software on a standard PC. Fast then, antique now. A lone operator exploiting human and algorithmic reactions in milliseconds. Fast forward to today. The game hasn't changed, only the speed and intelligence. Simple spoofing scripts are horse-drawn carriages next to hypersonic jets of AI-driven trading. Creating illusions of supply and demand remains. The tools are exponentially more powerful. An AI like InvestBuddy doesn't just parse market depth. It analyzes intent, flags spoof signatures, recognizes layering, and predicts the next strike. It learns from every trade. To a 2026 AI, his 2010 algorithm is transparent and easily countered. For every detector, a smarter manipulator. The arms race is relentless. Today, generative AI crafts patterns that look perfectly natural, even mimicking thousands of small traders in nanoseconds. The silent, invisible war is fought at light speed. The pajama trader has been replaced by a server farm, and the ghost in the machine is more powerful than ever. Section 9. Hero or villain? The unanswered question. What is the legacy of Navinder Sarao, the pajama trader from Hounslow? Is he a simple criminal, a fraudster who manipulated markets and put the global economy at risk? The DOJ thought so, and the letter of the law supports it. He broke the rules. He used deception, contributed to panic, Case closed. Villain caught and punished. But another view says he was a symptom of a flawed system, using tools exchanges and HFTs already built, a market less about investing, more about a nanosecond arms race where the fastest wins. He outsmarted giants, held a mirror to Wall Street, and the reflection wasn't pretty. He proved the emperor had no clothes. The headlines faded, fines were paid, the question lingered. It hangs in the silence between nanoseconds of today's trades. When one person can bend the world's most powerful financial system from a laptop, who is truly at fault? The person who points out the vulnerability, or the system that allows it? The story is a parable for our digital age.